Hello, my name is Mike Thompson. I'm a co-author of Business Diagnostics with Richard Rimick and Terry Rockwalski. I'm going to talk about a very interesting topic today, which involves the world of banking, and in particular the loan application process, which can be quite complex. We've devised a model that we believe simplifies this complex process, and I'd like to share this with you over the next few minutes. It's best described by an acronym, which is fairly easy to remember, W.A.R.S. or W.A.R.S, and I'm going to walk you through the four key components of the acronym that are captured on the slide now. This first slide is why. Why do you need the financing? It's really important to have that tied down at the onset. So when you're meeting the banker for the loan approval and application process, it's really important that the first thing you're able to explain is why you need the financing. Is it for an expansion of your company into new international markets? Are you purchasing a new capital item, a new equipment piece for the company? Those kind of things have to be really clearly defined and rationalized. So you have to have a very, very clear-cut reason as to why you need the financing. The next area, the A of the W.A.R.S, is amount. So again, you have to be really clear here. You can't just say, we believe we need about $500,000 to help our expansion into Malaysia, or we think we need to set up a new IT system and it's going to be a ballpark number around $750,000. You have to be really precise. You have to rationalize the amount very, very carefully. You also want to make sure that the amount will be sufficient. Also, you don't want to go too high as well there too. So again, getting a focus on the amount and being able to rationalize it is very, very important. The next area is the R of the W.A.R.S and repayment. So you have to be able to explain to the banker how you believe you'll be able to pay the funds back and when. So for example, if it's an operating credit, you have to show that you'll have a steady inflow of receivables over a finite period of time, say 1 or 2 years, and that the loan will eventually get retired or basically revolve out to a zero balance over a certain time period. If it's a term loan, maybe it's payable over 5 years. Again, you have to forward cash flow projections that can show the banker as to how the funds will come in and repay the debt. The final piece is the S of the W.A.R.S model, security. And again, you have to be able to explain to the banker what kind of security or collateral you have available. You know, will it be a general security agreement over the company? Will there be more specific security involved? Perhaps personal guarantees? You have to be able to sort of come prepared to explain that to the bankers as well. So that is the W.A.R.S model. Another key consideration is recourse. And this is a key word for the bankers. They certainly want to have full recourse back to the borrower and perhaps the guarantor, as opposed to non-recourse. Non-recourse lending has been done in the past, but it's caused lots of graveyards to be filled with different banking deals that did not turn out because the banks had no recourse apart from the asset, the only asset of the deal which was being financed. So invariably the bankers will want to have recourse back to the borrower, to other assets, perhaps to personal guarantees. In a way, the bankers are always looking for a second way out. And if you can demonstrate a clear-cut second way out to them as well as part of this application process, then your journey will be a lot easier. So in conclusion, the W.A.R.S model, why, amount, repayment, security, then the considerations of recourse and non-recourse will be really helpful to you as you move forward to obtain that loan financing application. We really hope you enjoyed this brief insight. It's part of the Business Diagnostics framework. We really hope that you will enjoy the book. And again, we believe it's a great way to keep your head above water. Thank you very much. Goodbye.